Good morning and welcome back to Almus Market Mornings, your daily dose of global financial updates. Let's recap what happened last week. Lower US GDP but higher US PCE. Yen broke the 155 mark, currently trading just above 159, but it went as high as 160. Recovery in the euro region as shown by some data points and broadly higher yields. The theme higher for longer, September rate cut expectations from the US dwindled. Remember, in December last year, a strong probability of a rate cut in March was built, which slowly moved to May and now September. This week, we have a host of data starting from inflation numbers from Eurozone, manufacturing PMI, and of course, the Fed rate decision. Morning, JK, what are the key narratives that will drive the market this week?
Yeah, good morning, Swaraj. Yes, Yen remains the major focus in the markets because last week alone we have seen a slide of nearly 2.5% in the yen. In fact, on Friday itself, we have seen around 2.5% fall in the yen after it broke 155. All hell broke loose, and there was no sign of Bank of Japan intervention. And as you said, we saw a high of 160 plus today in Asian market. Japan is close today. So what led to this move? The benign neglect of the Japanese authorities on the yen weakness. We have seen their repeated and strong statements against continued yen weakness at 152, but at 158, 159, there is not even an appearance of any of the officials of Bank of Japan or government of Japan. This can only mean two things: either they have given up, or they are letting the market get ahead of itself and get it to a corner and then surprise the market with the intervention. One cannot deny that this massive fall in the yen is not having any impact on the Japanese economy. Definitely, while inflation rates may take time to reflect official numbers, but I think on the ground level, it is going to increase the difficulties for the consumers, and politically it will be difficult to sustain yen weakness, beyond 160 and all that, at least, on not to allow the yen fall at the rate at which it is falling now. So that is why I feel that some sort of action, maybe a surprise action can be there, but definitely not through monetary policy as many people were hoping. They are not going to raise rates. They are not going to reduce the QE amount immediately, but there can be a selling intervention. And I think there has to be some understanding between Japanese and the US authorities, because if there is no coordinated intervention, see, if you see Japan intervening in Asia time, it will have very minimal impact, and there will be lots of guys who will be waiting for the dip that it provides to buy. But if you hear the name of the Treasury, US Treasury getting involved, it will have a major impact. So that's probably the kind of thing that Japan is trying to have an alignment with US authorities, and then they will intervene to have a good impact. So still wait and watch. No buying of yen until you see any signs of this. But selling of yen, one has to do with the real stop loss on the basis. The impact of this is other major currencies have been strong, because the yen crosses are once again going up. So you have euro yen, which is now trading at multi-decade high once again. So is the case with the GBP and all that. So these currencies are being bought against the low yielding yen once again on a fresh basis. The other impact is on the yuan, where the export competitiveness factor comes into play. But so far, the Chinese authorities have not reacted much, and their fixing of the yuan for the day is just 10 basis points higher than what it was on Friday. So even if they did want to react, I think they are going about it in a very slow way, or not in a perceptible way, so that there is no major disruption. But yes, their actions will also invite some reaction from US authorities, who are already eyeing China for more tariffs, etc. So it's a very tricky thing for Chinese authorities to react majorly to this yen depreciation. I think they will bide their time. Maybe hope that the yen revives itself in the days to come, and they don't have to act. But market remains on alert for any action from the Chinese authorities, and any such thing will actually rub off on other Asian currencies, including INR as well. As far as US is concerned, interestingly, a few people started talking about stagflationary situation in US, comparing it with what happened in 1970s. But I think it was like jumping the gun, because one GDP number coming almost a full 100 basis points lower than what the market was expecting, 1.6 versus 2.5, along with the higher inflation number, led many to start talking about inflation. But it is too early. It's just like, you know, uh, GDP numbers, this is only the first estimate, and we have two more estimates to come, and they can always be revised up. That's one thing. And yeah, I think if you look at the other parameters of the US economy, they are not doing so badly to think that there is a stagflation or anything. But yes, market will continue to watch the how the economy performs, because the higher for longer theme is here to stay now. And it may well be reiterated by the Fed authorities also when they meet on Wednesday this week. Therefore, this higher for longer can start eventually impacting the US economic performance. But it's too early to say that they will be getting into a 1970s type of situation. At least the asset markets are not reflecting. Asset markets are still doing well, particularly the stock markets. The theme is that higher rates means economy is doing well. Therefore, companies will also do well, and the stocks are doing well. On the yields, of course, they were somewhat sidelined on Friday in a rangy movement, because they were up against a strong resistance, 5% in twos and 4.75% in tens. So there was no much movement waiting for Fed now. What Fed is likely to do, possibly a touch of hawkishness because of the continued stickiness in the inflation, and that is what the market is waiting for. And of course, that will fire up the USDN further, and possibly see a correction in the other currencies as well. So lots of data this week. Apart from a Fed meeting Wednesday, we have a host of job market indicators from the US economy. Flash CPI number from Germany today, and that's very important, because the ECB policy is expected to ease first, ahead of Fed in June, and these numbers followed with the Eurozone flash inflation will be important indicator. Yes, German retail sales also important, because German economy has been seen improving, and the market wants to look at more indications of such recovery in in the Eurozone's largest economy as well. We'll have a final reading on the PMI surveys for various regions, and all important unemployment report on Friday, the non-farm payroll and the unemployment rate, which will be closely looked at by the market. So a lot to look forward to. Today will be a bit of a quiet day, except German inflation number. But I think we have a lot to digest today in this week. Rupee sideline. Because of RBI's presence on the downside as well as on the upside, within the range of 83.30 and 83.50, but will react if there is any large movement in the Yuan. Thank you.
Thank you, JK. And I think the yen, as you correctly mentioned, remains in the limelight, and there's no sign of intervention by the Bank of Japan, as it comfortably trades above 158, 159. And just to recall, 155 was earlier considered to be the area where they will intervene, but of course, there's no sign of Bank of Japan. Chinese yuan fixing has been aggressive, has not been as aggressive as what's happening with yen. As of now, the fixing has been only 10 basis higher, which is today's fixing has only been 10 basis higher than Friday's fixing. And considering the US lower US GDP but higher inflation, a stagflationary situation, that's a narrative, that's a new narrative that's being talked about. But as JK mentioned, maybe it's too early to say, as the GDP numbers were only the first estimate, and there's always revisions which are constantly happening. For the rupee, we are sidelined. RBI's presence, both sides, especially on the downside, remains, and of course, cues will be taken by the Chinese yuan and how the Asian pair moves. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.